Hi, it's Kate.
And Barbara.
Before getting into real estate, we knew a bit about mortgages, but not very much about the people behind the mortgage, the brokers and the bankers. With the real estate market being as active and as competitive as it has been in these past couple of years, we've had the opportunity to experience firsthand the necessity of partnering with men and women who are as invested in our buyers and sellers as we are, working as a team to make their dream of home ownership and successful closings come true. Today, we'd like to introduce you to one of the lenders we work with, Pat McRedmond with Fairfield County Bank in Ridgefield, Connecticut.
Thank you, Kate. Thank you, Barbara. I appreciate the opportunity to be here.
Oh, thanks for joining us.
Yeah, very much so, yes. Patrick, we have a couple of questions we'd like to ask you.
Sure.
One of the questions that everyone's asking is, how do these recent rate increases, how can they possibly work? Can they possibly work in favor of buyers?
Yes, they actually can for some buyers. Unfortunately, with the rapid rise in rates, what you'll see is that some people that were hoping to buy this year maybe can't. They suspended or kind of put on pause their home buy. But in turn, the people that are still in the marketplace that can afford to buy, I think might benefit from having a market where there's a little bit less competition for homes. And so what you'll see is hopefully they'll be able to negotiate, not push the price up very much, if at all, and not have to waive contingencies such as the mortgage contingency or the inspection contingency. So I think that's going to be a positive for a lot of borrowers. Plus, one thing that I always feel is that if you buy a house at a slightly higher interest rate and you're still comfortable with that rate, for example, a 6% rate that we have right now, in the future, if rates come back down, and they typically do, they are cyclical, they might have an opportunity to make that payment even more comfortable. So as opposed to buying at the top of the market with a really low rate where you can never improve your situation, you're buying into a situation where you might be able to improve your payment going forward. And if not, you're still comfortable right now anyway.
Right.
So I think it's kind of more a leveling out of the playing field in a sense.
Oh,
Yeah, that's a good way of looking at it.
Yeah, it's a great
Yeah.
perspective. With rates rising so quickly, what impact has this had on buyers you're working with?
You know, a lot of buyers started looking at houses earlier this year, and everybody was really looking at a fixed rate product, 30-year, 15-year fixed. In the last couple of years with rates being so low, those were really the primary loans that people were using. More recently, people are starting to look at some of the ARM products. One that I really like is a 7-year adjustable rate mortgage. For the first 7 years on a 7-1 ARM, that rate is fixed and it behaves like a 30-year fixed, but a much lower interest rate. So they're able to take this adjustable rate mortgage, still keep their payments lower, like what they thought they would be when they started looking. And the concern some people have is what happens at the end of 7 years? And the answer is you can always refinance this loan. Again, rates are cyclical, as I had previously mentioned. But there's another statistic that's kind of interesting, is that the average loan is paid off in less than 7 years. So for most people, that 7-year ARM will be the duration of that loan that they'll be looking for.
Oh, that's really interesting. I always forget about the refinancing part, so that's helpful.
Yes. Are there any special advantages for first-time buyers?
Yeah, there's actually some great first-time buyer programs. The state of Connecticut offers the CHAFA loan, Connecticut Housing Finance Authority. It's a terrific product geared for first-time buyers in the state of Connecticut. What it does is it offers a below-market interest rate, reduced PMI expense, offers up to 100% financing, and even the ability to finance closing costs in some cases. So that is geared towards first-time buyers. And a first-time buyer, by the way, is somebody that hasn't owned a property in the last 3 years. So you can actually be a first-time home buyer more than once.
Oh, that's nice to know.
Absolutely.
Yeah.
And in addition, there's some special programs geared towards people that are maybe on low to moderate income levels. If somebody's buying a home or refinancing a house and it falls into what we call an LMI area, a low to moderate income tract, there is some special financing options there where they can receive a $1,000 closing cost credit from my bank, and also an eighth off the rate in some cases. So that's been an attractive program that my bank has been offering. There's also one other one called the Fannie Mae Home Ready product, and that's also kind of geared to maybe a lower income borrower where they will offer a lower interest rate. PMI is also reduced, and it just makes it a little bit easier for that home buyer to get into their first house or even refinance a house if they already own the house.
Oh, wow. Yeah, nice. That's great. With rates rising so quickly, 6% sounds a little high to a lot of buyers. What are the highest rates you've worked with in your career?
I started the mortgage business back in the early 90s, and we did work with rates that were close to 10%.
Okay.
At one point in time, I was working with a special program the state had called the STAR program, and those rates were in the 8% range, and those were great rates at the time. So it's all relative. Rates right now that are in the 5 to 6% range, they seem a little high because we're used to rates in the 3 to 4% range. But certainly quite a bit better historically than I think a lot of other rates. And going back in time, people still remind me back in the early 80s that there were rates that were in the 17, 18% range. So again, all being relative, a rate in the 6% range historically is pretty good.
Okay.
Yeah.
That's great.
Yeah. So would you say that today is still a very good time to buy?
I think so. A lot of people that we're talking to that do not currently own a house and are renting are saying that their rents have gotten to be very expensive in the last couple of years. And so for them, even though the rates have gone up on the mortgages, we're looking at the payments, and in many cases, the payments are still going to be less than the rent or similar, and they're building equity and they own a home, and it seems to be a nice opportunity for a lot of people to still become homeowners. So yeah, the market's still very attractive.
Oh, great.
That's great.
We think so too.
Yeah, we do.
Absolutely.
And just tell us a little bit about yourself, if you don't mind.
Sure. Pretty much a lifelong Connecticut resident. I've lived in Brookfield for most of my life. Started the mortgage business back in the early 90s. Worked with a company called McHugh Mortgage Company. We specialize with first-time buyers. The CHAFA program, as I mentioned, plus FHA and VA. So kind of cut my teeth on the more difficult loan products. Started with Ridgefield Bank back in 1995, and Ridgefield Bank in 2004 merged with Fairfield County. We were Fairfield County Bank ever since, and it'll be 27 years in September.
Oh, congratulations.
Yes, thank you.
Well, thank you so much for meeting with us today. This has been wonderful.
Yeah, it has. Thank you very much.
My pleasure, thank you.
It's been great, Pat.